Hi, everybody. Thanks for joining the call and conference today. Um, I just wanted to not zoom out to 2008 because I think 2008 was very different from 2020. 2008 was a problem with the monetary system in itself. And I think it led to the phenomenal invention of Bitcoin and blockchain and has created tremendous value since then. But in 2020, the underlying problem is a health one and a government one where we're not prepared for a pandemic and not a money problem. We're treating money as a solution to the health problem by artificially inflating our economy. Typically, your stock market and other indexes are supposed to reflect how the underlying uh, economies are doing, but that disassociation has happened primarily because of the stimulus available in the market. And we see market crashes as a bad thing, but they really aren't. Market crashes weed out the weaker businesses and in turn leave a vacuum for stronger businesses to survive, consolidate the market, and new innovative companies getting additional capital from there. And yeah, unfortunately, since the last couple of downturns, we're not letting failed enterprises fail. Um, a classic example would be what happened with banking in 2008 in the US and 2019 and 2020 in India, unfortunately. Um, we've bailed out more than one bank, and I think the government's job of socializing the downside while privatizing the upside of of risk is going to weaken the Indian rupee far more than we currently are imagining. And coming which smoothly transitions me to the following, which is okay. Now that I'm sitting in India, what do I do? And I don't know why Mohit's experience was such that every time he bought Bitcoin, he regretted it because my experience was such that every time I bought Bitcoin, I regret not buying more. And I think the 2017 boom was many enthusiastic people directly getting into the space because of um, the appreciation in the price, which was not necessarily correlated with the innovation. And I think ICOs are the wrong way to do financing for companies. I think the right way to do it, at least the best system that we have, is venture capital. And yeah, we're very much going down that path too. Now, what I am a little concerned about is using a system of gold or any other asset that has counterparty risk when you don't have to take counterparty risk. If you are redefining banking from 0 to 1, I think I would rather opt for a system with as little third-party dependencies as possible. I think that's what crypto brings to the table, and that's what a lot of us are bullish about. And that's the ethos of the Bank of Hodlers too. Although we are centralized today, the long-term intention is to be decentralized over time. And more than that, enabling the decentralized tokens to be bankable no matter where you're based out of, no matter what the counterparty, no matter what the acceptance rate of the counterparty is. So I also have a different opinion on the way acceptance is uh, government acceptance for different projects, which is governments don't necessarily back the best projects all the time or the best technologies. It's not in their incentive to do so unless they're benefiting along the way. Although we see that the governments are supposed to be employed by the people and they're supposed to be representing the people, there have been situations where that correlation tends to deviate. A good example would be in the 20th century, there were more than one situations where gold was banned. And of course, gold was banned primarily because people were holding on to gold. They did not trust fiat. And that was the earlier days of moving off the gold standard. You could say that was a necessary push for people adopting paper currency, but it came at the downside of people being arrested for holding on to their assets. I think that's just ridiculous. And what, 50, 60 years later, it's all okay again? How, like, what are we doing here? So no matter what your government may say they might represent. You know for a fact that if they're not allowing you to hold the asset class that you want to hold, be it gold, be it crypto, be it anything else, they're not 100% aligned. I just wanted to bring this to your notice, and it's government exists to as a point of friction to possibly balance out and create good for everybody at a whole, but not necessarily the people who save. The people who save indirectly end up paying for the people who don't in some shape or form. So if you fall under the category of the people you save, it's in your best interest to invest in the best asset classes or the best portfolio, irrespective of what the government actually tells you to do. Now, I'm not urging people to break the law here, but the fact of the matter is there is none. So you can do whatever the heck you want as long as you're not circumventing your $250K a year, moving money out, as long as you're fully declaring how you're managing your capital, and as long as you're paying your fair share of taxes. I think, uh, yeah, you have the total flexibility to do whatever the heck you want. Don't let anybody tell you anything else. And if somebody wants to tax you, that's fair because you are reaping the benefits of the system. But like your post tax bottom line is what matters anyway. So optimize for that.